Hi, and welcome to the Market Alert for Friday, the 17th of June 2022. There's a lot to get through this morning, so grab a cup of tea. It could be a bit of a long one. Starting off with yesterday, which I forgot to mention that it was the Bank of England decision day yesterday. I missed off the Forex factory news because I was concentrating on the US interest rate increase from the night before. But yesterday, Bank of England raised rates for a fifth time in a row as it fights mounting inflation. Well, good luck with that at 0.25%, because this morning newspaper headlines are showing that 11% hell is on the way. Well, you can read the rest of them for yourself. I'd love to know where they get this 11% and 15% from, because it's been like that for a very long time. It's only just now that it's being acknowledged. It's interesting to see that the 15% here in the Daily Express, which is given to hyperbole anyway, but it's probably more accurate than any of the other front pages with regards to the inflation. They're soaring to 15%. Yes, well, it's not as if I haven't mentioned this for the last couple of years or more. And over to the US yesterday, Dow dumps below 30k as as huge OPEX looms. Yes, it's quadruple witching today. So let's see what happens at 1 p.m. And the same news really, futures down 600 as recession reality sets in, and a capitulation. Stocks hit with fourth largest sell program in history this morning. It's different this time. Well, let's see what happens today with regards to that. And yesterday there's the official Bank of England increase. Not anything to really shout about, is it? Certainly the highest it's been for some time in the UK. Let's see if I can drag this across. It's been a long time since we saw 6% back in 2007. But certainly in recent times you can see, if I just drag that back so you can see closer to where we are, you can certainly see there that we have a steady increase in rates, but we've got a long way to go before the 2007 6% level there. Let's have a look at, while I'm thinking about it, yesterday, great day on the markets, nice profit, and also over the last 6 months from the 19th of January, looking at some great returns. Now, I've recorded a video, and I forgot to mention this yesterday with everything that's going on. If you go to the members section, you'll see in detail the 170% returns in 6 months, so all in MT4 there, all audited, and showing the equity curve and also the analytics. Gold-silver ratio, I can see is moving down at the moment, so a bit of a move to the downside indicates that silver is increasing higher or more stable than gold prices at the moment. And US dollar down significantly yesterday, which sort of preempted what we saw in the May. We saw a bit of a move to the upside. This was the day after the interest rate increase in May, where the market managed to move to the upside. But yesterday it was completely different. The market's lower, but we got the option expirations today. That may have an impact. Right, let's have a look at the stock markets. We'll kick off with the Dow. So let's see if we can find it. And yesterday we saw the down day for the Dow, along with all of the other stock markets as well. Futures down 600 points at one point, but down significantly. I'm going to have to move to the bigger time frames here. Weekly chart's no good. Monthly chart is. One of the most important things that happened during yesterday's trading session, if we just bring up the 5-minute chart, I'm going to go to the pre-market session first. Very, very interesting morning with the Dow, because it didn't occur to me until I was in a trade in the German DAX, and I couldn't understand why the Dow was holding. And that's because this red line here is the 30,000. It's the psychological level. And what they did yesterday morning was absolutely fascinating. Every time it hit 30,050, they kept bringing the market back. But of course, in the afternoon when the Dow opened, the cash market opened, they just drove straight through, which was great because I'd already preempted that this was going to be the case, that it was only being held by the futures traders. But as soon as the cash market opened, then the market was moved to the downside. And you can see that in the 30-minute chart as well. It looks like quite a narrow range for the cash market yesterday afternoon, and it certainly was. If we just go from here through to the close, you will see it was 441 points. That's a good day. But what's really interesting here is the move down earlier on in the day. I'm just looking for where we kicked off in the futures in Germany, which is this bar, and the whole lot combined to the low yesterday, 947 points. Big move to the downside yesterday, but no surprise, is it really, given what the Fed are doing at the moment. So yeah, just going back to the monthly chart, we took out a couple of fibs. Watch for the 50 EMA in this market in the monthly chart. I'm just looking at this low here as well. That's going to be significant, but at the moment the market's back above the 30,000 level. So let's have a look at that in a bit more detail in the 5-minute chart at the moment as well. All the overnight markets moving back to the upside ahead of the quadruple witching. So there you can see the Dow on the overnight moving back to the upside, and in the 30-minute chart we get a clearer picture. You can see coming off last night's low before the close and then moving up quite nicely. Let's just have a look and see how much the market's come off those lows overnight as well. Yeah, 445 points on the Dow. The volatility is certainly present in the market and continues, and has done now for the last 6 months. Watch the DP as this market moves higher. We've got the 50 EMA where the market's sitting above at the moment in the 30-minute chart. Whether this holds or not, who knows? But certainly at the moment, we've got a bit of a dead cat bounce going on. Watch the low today should the market move back to the downside, because as I mentioned earlier, we'll be heading down into that sort of 50 EMA, and also back below that 30,000 at 26,964 for the low that we see over here back in March of 2021. So certainly the moment the market is bearish, and has been since the start of the year. You can see they're red all the way at the moment in the monthly chart. German DAX, we can see that yesterday, big move to the downside. Let's just go and have a look at the 30-minute chart. We'll come back to the daily chart and the bigger time frames in a minute. Let's have a look, see how much the DAX dropped yesterday. It was a massive move to the downside. We kicked off with the futures there and all the way down to the Dow close. You can see that we had 601 points in the German DAX yesterday. Big move to the downside. Don't normally see those sorts of days, but again, whilst we're here overnight, you can see we've got a bit of a bounce going on at the moment, very similar to the Dow as well. Watch the DP level. We've got a bit of divergence there at the moment, a bit of a fall off in momentum, but the 7 o'clock open is going to be the deciding factor for this market. Let's go back to the daily chart. Let's start moving out into the bigger time frames and have a look. Yeah, automatically you can see that we've got the bounce there from the 12,968. 13,000 is a very important level for this market, as the 30,000 is for the Dow. At the moment, we're up 168 points above that psychological level. Again, let's just have a look at bigger time frames. The monthly chart, you can see that we're at 78% retracement yesterday, where the market came off. And I don't think, oh yes, the weekly was the 200 MA as well. The market held at the 200 MA when the Dow was holding at 30,050. But also note that it stopped at that 78% retracement yesterday as well, when it hit that low and has bounced off that on the overnight. So yesterday's 5-minute chart, we saw the market just moving sharply to the downside, a bit of a bounce, and then continuing as the Dow also moved lower, driving prices. And then of course we had the rate increase from the Bank of England at midday, which you can see in this area. A bit of a bounce, and then resistance, and then the market moving to the short side. Interestingly enough, in the afternoon, the DAX really tried to hold at the 13,050 level, and then broke As you can see here, this red line at this level is the 13,000 for the DAX, major psychological level. And you can see how the market went through 50 points and tested. We've got demand oversold, and then they managed to bring the market back and have continued to do so on the overnight market, which you can see there. We had a gap open. The gap was filled at the close as the market became oversold with some demand, and then prices moving as they are at the moment to the upside. You will see the DP just above this as well. So expect the futures market when it opens to move up to this area. And let's move on and have a look at the S&P and the FTSE. Kicking off with the daily the S&P, you can see again all very, very similar. We've got a bit of a crossover on the stochastics at the moment, divergence as well. No surprise with the bounce. The key to today's trading is going to be the option expiration. I think it's a couple of trillion, and that's going to kick off around 1 p.m. in earnest, but there will be some liquidation on the electronic market as well. In the 30-minute for the S&P yesterday, of course, the decline with the Dow holding very well at this level here, this red line where the market's currently trading, which is 3,700. You can see the market coming off this. Maybe this is what was holding the Dow at the 30,050 level, who knows. But then the supply came back in, and the market being broken with the Dow following all the way down, of course, to the 3650 level, before we see that bit of a bounce there with the market now pulling back, but stuck at the 50 EMA. Again, you've got that DP to get through. If it doesn't get through this, then you are going to see the market struggle a bit. You'll see also that in combination, and this is going to be the same for all of the other charts we've looked at, I've just not marked it up, but we've got the 89 and 78 in the DP area. You'll find that's the same in the others as well. So the DP going to offer some significant resistance there. In the FTSE, big move down in this one during yesterday's trading session. Let's just have a look at the 30-minute chart and also have a look at what the decline was. Again, kicking off with Germany all the way through with the electronic session into the evening. You're seeing 278 points. That's a big move down in the FTSE for yesterday. But overnight, again, you've got this DP here and the market just approaching this nice recovery, nice bounce from there down to this low. Again, we're in that sort of 89% retracement area. So a bit of resistance here. It's going to need the futures of the DAX to drive through this area and move it back to the upside there. And in the currencies, volatile day yesterday for the JPY, UK interest rates up, causing a bit of a chaos. The dollar down, as we saw earlier in the dollar index. Market bouncing off the 78% retracement in the daily, with the market being oversold, and a cluster of volume here with demand for the previous 2 days as well. In the 30-minute chart yesterday, you can see the impact of the Bank of England decision to raise rates by 0.25%. We were already oversold on the downside from the overnight markets, and then we see prices moving back to the upside. Overnight, we've seen some volatility. That's because Japan said it wasn't going to do anything about its monetary policy. It's going to continue easing with inflation around 15% globally. Well, good luck with that one as well. It's a bit like Europe, isn't it? 0% interest rates, and it goes to show you how fragile the European economy is if they can't even raise rates by 0.25%, let alone try and combat inflation of 15% and going to get worse. So goodness knows what's going to happen with the European economy apart from complete destruction. So that was the yen. And that's like I say, that's the reason for the overnight volatility there, which is quite significant. 100, 200, 250 point range during the overnight in the yen. British pound rallying yesterday, which you'd expect because there's a rate increase. It's positive for the currency. However, let's have a look at this in a bit more detail. In the 30-minute chart, you can see that they moved the market down about 80 points from the previous day's close on the news, but soon brought it back to the DP level. And if you look in the smaller time frames, there was plenty of opportunity to buy the shakeout and then they move the market up significantly, which you can see there, 100, 200, 250 points to the upside. This is off slightly because the dollar is up overnight at the moment, but we've got the DP there, oversold, and the crossover. Just need a bit of demand there to move the market back above the close and the high, and also we need to see the dollar move to the downside as well. In the monthly chart of the pound, you can see coming off that 78% retracement, as we saw in the German DAX in their weekly chart yesterday as well. And if you're still with me, we've made it to the metals. Yesterday, silver moving higher. However, initially I was correct in the assessment that they were going to put in a straight reversal, but then the dollar decided to sell off, and this obviously supported the silver and the gold price. And we see it move back up towards that 22, which is this red line here. We got to 21.98 yesterday. They will not allow this market above the 22 level, or keep it above that level at the moment. But still up slightly on the overnight. You're going to have to watch the DP level, the 50 EMA, quadruple witching, and the 1 o'clock fix for this market. So just going back to the daily chart of silver, you can see we've got resistance where we had that last sell-off earlier on in the week, where they had to sell 500 million of paper ounces of silver to drive the market down to this level. But at the moment we're seeing the market reverse off this and trade back quite nicely. Looks like around a 50 to 62% retracement there at the moment. Yeah, 62, just sitting on there at the moment. Meanwhile, in gold, up strongly yesterday as well, getting back above the 200 MA as well, which is good to see. This in more detail, we had a gap up yesterday as well. This happened at 2 p.m. I don't know why, but it decided to gap up and came back, filled the gap at this level here, which is going to be 18,020, I think. Let's just have a look. It's not 18,000, 1825 is this level here. And we see the market move higher as the dollar move lower. And of course, overnight, the dollar index has moved higher and gold has moved sharply to the downside. And interestingly enough, that's why the gold-silver ratio that we looked at earlier, just to go back to it, you can see that this is moving to the downside. And that's because silver's held more strongly overnight than gold in response to the dollar index moving to the upside there that we're seeing at the moment. Okay, I think that is it for this one. Let's see what the market does with regards to the option expiration. Expect a dead cat bounce following big sell-off during yesterday as well, but option expiration can bring a lot of downside volatility as well. Okay, that's it for this one. Have a great weekend. Actually, just before I go, I nearly did it again, didn't I? Let me just have a look at today's economic news. And I think what we got, I'm glad we've looked, Powell speaking at 1:45. Also, US holiday on Monday. I knew there was something else. This is... banks will be closed in observation of the Juneteenth, whatever that is, National Independence Day. So yeah, holiday on Monday, so all the banks and bonds will be closed on Monday then. So just keep that in mind. But I'll speak to you on Monday about that anyway. But today, Powell is going to do his best at 1:45, which coincides obviously with the quadruple witching event as well. That's it for this one. As ever, thanks for watching. See you in the next one.